Hey everyone, me Kevin here. All right, well, SPY is rocketing into the close of the day here, which is really good. Coming off 449 on SPY, last 30 minutes of trading, up a nice 0.5% here just in the last 30 minutes of trading. QQQ moving up into the close as well. So really bullish to see the price action. It was a little bit of nervousness at the beginning of the day, but nice moves up towards the end of the day. Tesla down about a third at the time of this filming. Getting a lot of smaller companies starting to really move back. Lemonade 7% here, Dutch Bros 12%, Toast 13, Arrival 15 again. Arrival's just been on a rocket ship. Cloudflare is coming back up 6%, which is incredible. 5% on SoFi, Affirm 4.5%, back to $67. Some really incredible moves to the upside here, helping propel the S&P up. Take a quick peek here at, and then I want to report some things. JPM pushing 1.62% to the upside. Really strong moves intraday, and also had that similar move when the S&P started moving. So could be seeing financials really lead the way here. ARC's up about 1.6. But we got to talk about some data. So let's talk about data. All right, so here's what we got on data. So we have for manufacturing, we got a couple releases. We got the PMI and ISM. Both of them showed slower growth in January. And there's an expectation potentially that this could be related to the Omicron decline. Now, what's really important, which makes sense, but what's really important is to know a few things. Number one, mobility data plummeted in January. And I expect we're going to see this V-shaped recovery, like the Larry Kudlow V-shaped recovery in mobility data. And that sort of movement is going to leave a little bit of a hole for the jobs report, but it'll be interesting to see how it affects inflation as well, which comes out in about 9 days. So TBD on that. But jobs report, the White House is freaking out right now. The White House is freaking out mostly because they're like, oh my gosh, like what if we have this horrible jobs report and then everybody hates Joe Biden even more? Anyway, so that the White House is freaking out on this, but the reports we got on manufacturing, and there's some important pieces on the inside of this. The ISM manufacturing report was spot on, but the big problem was the prices paid index. And this is dangerous, okay? Because overall, the economy is booming. I mean, you look around, people are spending money like they're freaking nuts. I mean, they're overpaying for cars. They're overpaying for planes. They are literally going nuts spending money. And I think this is one of those times where I look back to what life was like in 2006, and all my friends and neighbors are getting new boats and RVs, and they're going on trips to Hawaii, and they're getting new clothes, and they're getting new computers and tutors and hooters, whatever, right? People are spending money like crazy. That's great for an economy. That's great for GDP, but it's not great when inflation is rising. And the number that came in that is not great is that the prices paid for ISM came in at 76.1 versus 67. Not ideal. That is a big beat on prices paid, which is bad. New orders, and again, manufacturing coming in stable. And the JOLTS report, which is also bad, showed little signs of slowing due to Omicron. If anything, we had the lowest discharge rate in history, in the history of the JOLTS report. And we're up to 10.925 million job openings. Now, this is down from the high that we had of almost 1.1 million in July in terms of job openings, but we were expecting 1.3 million job openings. We got 1.9. Now, why is that bad? And this gave the stock market like a little brief heart palpitation, but doesn't really matter because the trend today has been up. The trend yesterday has been up, and the trend of the end of the day Friday has been up. So we're on this little U-turn uptrend right now. It's creating a lot of euphoria in the market. But one of the things data-wise to remember, folks, is let me draw it actually like this. Let's say the ideal world, I think this analogy, this pictorial analogy here is the easiest. Let's say this is jobs and this is inflation. Let's say this is the ideal balance, right? Well, inflation right now is like this. It's way high, right? And jobs right now, in terms of like jobs and openings, we'll say, are also at like these insane highs, like the highest levels we've ever seen in the history of the JOLTS, with the exception of July. It's crazy. And I think what frequently gets forgotten in this market is that when the Federal Reserve moves to bring inflation down, people are like, oh, well, they won't be too aggressive because that'll take jobs away. But the Fed's looking at this going, we don't care. Please, we have plenty of jobs to give away in terms of we don't need this many openings. We have too many openings. We don't have enough workers. And so in theory, you could see this almost like equalized shaving of the Federal Reserve. Yeah, just kind of grinding on this economy to try to do this and to bring it to that level here. That grind has the potential of being very, very painful. Now, this is macro, right? And there are two things to remember when it comes to markets is you have day-to-day stock price fluctuations that do this pretty wildly, right? And then you have the macro cycle, which is much more, and this probably deserves a dedicated video, but you have this insane day-to-day, which honestly the day-to-day is probably more like this, which a lot of it is noise. The big problem that you potentially have is the macro cycle of where are we in the macro biz cycle, right? And this is really what you want to pay attention to is where we are in the biz cycle. Are we here? Are we here? I certainly wouldn't say our economy is here. Certainly wouldn't say we're anywhere here because that would imply that we're falling, which we're not. We haven't seen that yet. And I really don't think we're anywhere near just coming out of a recovery. So in terms of the macro business cycle, you're probably somewhere in this range here. And of course, the hope is that we're here. This is the hope, and this is here is the fear. So keep that in mind. The differences here in the cycles to watch. So those important things to watch. If you have not yet seen, excuse me, the push on what's happening over at Kimberly-Clark and UPS. I really encourage you watch the video that I posted on the worst report for the stock market in a while. That I just posted that, I don't know, like an hour or so ago. Really recommend you watch it. And I would pay attention to all of the details in it because that's going to give us a little bit of an idea in terms of, okay, when do we actually expect some of these pains to leave the market? Now, in the meantime, we've got stocks doing quite well today. Now, we've seen these sorts of rallies before. And the big question that I always look at is when do we break back to levels that we've seen previously? Like JPM's, actually for JPM, having a good day. It's up almost 2% today. But we're still not even at the lows that we hit in September in terms of recovery. Like we're below those prices, right? Let's go to, for example, Tesla as well. Look at the 4-hour trend on Tesla here. Somebody else recommended the 4-hour trend earlier, and so shout out to them. I don't know who it was. But I went in here and I drew some trend lines on the 4-hour myself. And I don't like this. I think it's nasty. So let me explain this here really quickly. And remember, when you have trend channels, you have breakouts to the upside or the downside. So here we had this trend channel starting in November. And you're really having lower highs, lower lows. This is a very clear trend channel right here. And then we get a break up, which is great. Break out of trend and we run, which is great. But we don't end up hitting our previous highs, which is bearish. And then we actually create a new channel that has an accelerated decline curve. Now, this could be the most bullish thing ever because maybe this downward trending channel is a sign that we are setting up for a beautiful breakout of this channel. And if we do, the next question is going to be, will we break the high that we had here? Will we break 1200 or are we going to reject off of a lower level like 1150 or whatever, right? Because then we see a longer term trend when we zoom out of a decline in ceilings, right? But anyway, right now, this declining trend here on the 4-hour chart for Tesla, not ideal. And even though you're seeing some stocks rally and move today, Tesla's still stuck down about 1%. If anything, it just declined another 2/3%. So this is just, yeah, there we go into the close. But again, this is just micro minute candlesticks here, whatever. You still have a flight to safety happening, a substantial flight to safety happening in the megas, right? And it really began here in late January where Apple really started being the target of, wait a minute, Apple is our free cash flow dividend machine. Let's go. Every analyst right now wants, yes, thanks, Chris, for shouting that Every analyst is shouting out they want free cash flows, they want more dividends, and they want more buybacks. And that's fine. But to me, that's a sign of nervousness by institutions because they're running where there's more cash, which makes sense. But that's driving companies to focus on returning cash to shareholders. And that actually hurts like the ARC style companies that are the innovative ones that are not returning cash to shareholders and robs them and delays them of potential innovations. So I think those are longer term issues. That's not to say that, I mean, there are a few definitions of longer term, right? The short term is usually deemed next 6 months. The medium term is usually deemed 1 to 2 years, and longer term is usually deemed 2+ years. Now, if you thought we were in a bear market, the beginning of a bear market cyclical shift, then you could potentially expect 2 to 3 years of actual burn in the stock market. That would be very, very bad. You could have 2 to 3 negative years, probably closer to 1 to 2 years of negative burn in the stock market, if you believe that there is a cyclical rotation happening in the business cycle. And then, of course, the day-to-day doesn't really matter. But we're still not seeing short covering. We are seeing shorts bets against ARC reducing, which is good. So less people betting against ARC, which I like. Ooh, Tesla just popped a little bit, just tiny little bit here. You go to the 1 minute here. Oh, yep, a little bit, final little candlestick here. But it's been quite volatile today. And we're still waiting for signs, obviously, that we can actually start estimating when supply chain constraints are going to end. A lot of companies are saying, hey, hopefully by the end of the year, which the stock market is going to try to start pricing in. And that's really important. The stock market will try to price in. Okay, good. If our supply chain issues go away by the end of the year, that's great. But what if they don't? And that's the danger. This is why we're looking for inflection points on data. In my opinion, my favorite form of data is earnings calls. And that's why I go through these earnings calls like crazy. And I post the videos. Seriously, I wouldn't make a 17-minute video on an earnings call if it weren't, in my opinion, critically important. I know when you hear that might be like, oh, I don't know. I don't want to hear that. But no, it's really important. Anyway, tax day. How does tax day impact the stock market? It depends, usually the thesis is you go do your taxes February, March, and then you're like, oh my gosh, I got to pay this much in taxes. Guess I can't buy stocks anymore because you need the cash to pay taxes, which is likely because a lot of people made lots of money in 2021, and myself included, trading and otherwise. Trading was great. Trading was like way easier in 2021. It was great, but you've got to be aware of these trend cycles that we go through and like what we're seeing at Tesla too. But anyway, yeah, that could absolutely impact the stock market. Totally. So Jake here is not too optimistic about supply chains. Well, somebody here says it's time to buy small caps. 80% down on most. How cheap do you want in? Yeah. Remember, folks, just because prices go down doesn't mean that companies are cheap. They become cheaper, but not cheap. The multiples on a lot of companies in our stock market are still relatively high, which maybe that's just deserved now. Maybe we're in a new era, a new paradigm. People pay higher multiples for stocks. They're willing to take less cash in the future. But who knows? Who knows? All right. So let's go ahead and take a look at some of the other things that are going on in the world right now. Let's jump over. Let's see what we got here. All right, let me close these tabs here from our course member live stream. There we go. Cool. So I want to look at the bond market quickly. So 1.8 on the 10-year, been relatively stable. SoFi is the only small cap I trust. I like SoFi. Relatively stable on the 10-year today, which is good. Sitting at around that 1.8 number. Been kind of chilling around that number most of the day. 1.79, 1.8, so not a big deal. Oil, look, energy costs really suck. They've been pretty stable around this 90 in just the last few days. We just dipped below 90 on Brent here. I'm going to watch this because obviously this has a big impact for inflationary concerns as well. Jumping on over to Bloomberg. White House warns latest job data will be ugly due to Omicron. Yeah. Okay. This is interesting. So while I disagree with Ray Dalio on some things, I am very curious to see what their thoughts are here on market turmoil. And then we're going to look at that ARK talk. And again, we've been seeing a lot of talk about shorts going down on ARK. I've been noticing that as well, that the shorts have been getting, like, less people have been putting bearish bets against ARK. But it doesn't necessarily mean anything yet. We'll see. All right, let's take a look at this. So this is about Bridgewater Capital. Hold on a second. Bridgewater Capital, again, led by Ray Dalio here. Let's see what they say here. So investors may be underestimating the need for aggressive monetary tightening from the Fed and other central banks to combat inflation, resulting in significant risks for markets, according to Bridgewater Associates. Following hawkish comments from Powell last week, investors have brought forward expectations of tightening, pricing in 5 quarter-point hikes this year. Further out, however, they're predicting fewer rate increases, anticipating the Fed will end the cycle with a policy rate around 1.65. Consumer prices, okay, no, I've already searched. I want to just say this before we read what the Ray Dalio folks here say, and we are going to cover earnings today. But I want to just say, again, before we go forward here, that personally, I don't believe that interest rates at 1% are going to do anything to bring inflation down. We need the supply chain issues to end and the consumer to say, I'm done. I'm out of money. I'm done. Until then, inflation's not going away. In 10 years from now, we'll look back and inflation will just be like, whoa, it'll be like a roller coaster. It's going to come back down. Inflation always comes back down. No guarantees, but at some point it comes out. It's just a matter of how long, right? And how painful is our transition going to be going through it. All right, so let's see what Ray Dalio says here. So the markets are discounting a smooth reversion to the prior decade's low inflation without the need for an aggressive policy action. That it will mostly just naturally happen on its own. Okay, so in other words, they're saying here the market believes we're just going to have like a soft landing, like Jim Cramer says. We're going to play the violin, the rescue boat's going to come, and we're all going to get off the Titanic. Everything's going to be fine. We see, okay, here we go. We see a coming clash between what is about to transpire and what is now being discounted. Oh, yikes. We've got here, the massive adrenaline shot of money and credit during the pandemic has now produced a self-reinforcing cycle of high nominal spending and high income growth that is unlikely to cool without aggressive monetary tightening. That's bad. That's the worst case scenario, folks. It's what I call the SHIT case scenario. The poop case scenario, okay, is things continue to go. Spending keeps going. People keep spending as rates go up, and people are like, interest rates at 1%. Pop a champagne over that. Keep spending. Okay, but anyway, because there is such a big difference between what is discounted and what we think is likely, we see the potential for large market moves, which of course implies significant risks from holding assets, as well as significant alpha opportunity from price change, according to the report. Yeah, so let me just explain that alpha opportunity really quick. This is basically saying buy in the freaking bottom of the market. It's when returns are outsized in specific stocks that perform better than the market is expecting relative to their beta weight to the Dow. And if you didn't understand anything I just said in the last 30 seconds, basically, there are going to be some good deals coming up. According to Bridgewater. Bridgewater has grown significantly less bullish on financial assets. Well, this is a shift. Now, keep in mind that Ray Dalio has, since 2019, he's kind of been a, how should you say, a little bit bearish. He's kind of been like, hey, we're in the ninth inning. This is the end, blah, blah, blah. Anyway, I don't know if this is a significant shift in their opinions of the market, but anyway. So, okay, let's now read. So that's something bad. Let's now read a better one, which is this. So this is a good inflection point. So I try to do my best to balance good news with bad news. Unfortunately, a lot of news just happens to be bad. Kathy's flagship ETF has been caught in the middle of a push and pull, with latest trading data suggesting bulls are eclipsing bears for now. Well, that's good. Traders poured almost 294 million into ARK in the most trading session. Wow, that's actually huge. Usually she's plus or minus like 80 to 140 mil. That's really good. Biggest intake in June was enough to erase this year's withdrawals. That's good. Astonishing turnaround for a fund that delivered short sellers more money in January alone relative to all of last year. Wow. Short sellers made more money shorting ARK in January than they made all of 2021. That's insane. Worst sell-off in history, blah, blah, blah. Short interest down to less than 9%. Wow. A little bit of a squeeze happening there. That's good. Some short covering going on. Yeah. Yeah, that's incredible. So what you don't want to see is, hold on, some of the sentiment indicators that we're tracking are flashing almost extreme bearishness. And that was particularly true in the technology sector. It's not unreasonable to see a bounce, whether that's new buyers or people recovering or possibly a combination of both. Yeah. Yeah. And this happens with potential bull trap markets. Now, I hope this is the bottom, right? Because I think everybody's sick and tired of like a red market. Nobody wants this crap. Did Tesla go positive yet? No, Tesla's still down about 0.6. We're tired of this crap, right? Going back to the 4-hour chart here on Tesla. Tired of this crappy pain market. But the trend has not been the best friend of ours lately. There's a lot of hope, though, that we're getting close to the bottom. I'm not convinced. And I hope to become convinced. So I'm doing my best to find some, the most positive kind of inflections that we can find. It's been difficult. I do like what I see at Arrival, though. I've been keeping a close eye on Arrival. See, if you go out to the hour chart, Arrival looks really nice. You've gone from basically $3 to $4.50. That's a 50% gain in the span of a week, less than a week. Arrival has gone up 50%. That's crazy, right? And it shows you how quickly these smaller cap stocks can move, which is really incredible. Really, really incredible that you could get these massive moves in small caps, which I think is awesome. Like if you want to play bull traps, I personally think the best way to play it is by swing trading the small cap stocks, because they have the biggest propensity to have these massive moves intraday. But no guarantees. I mean, let's see what Shift's doing. Yeah, Shift's only up 3.4%. And here's a very highly shorted stock. I think, what's his name? Laser's at 15.22. Nice. Lemonade's doing quite well here at 7%. It's been a rocky road as well, but not bad. Back to 34, It's still, the problem is you do this, you go to the day chart and it's like, oh gosh, we're getting so excited about those tiny little green candles right there without any positive underlying data. Oh no. Right? Anyway, so okay, let's see what we're gonna have for earnings today. We got a lot of earnings to cover today, and I love me some earnings, so we're gonna cover these right here shortly. Okay, first we're gonna see PayPal, then we're gonna see PayPal at 415. We're gonna see AMD at 415. We're gonna see Google at 405. We're gonna see Starbucks at 405, EA at 4, MicroStrategy. Wow, we got a lot to cover today. Oh, hold on a sec. I hear Max yelling and it's bothering me. Let me close my other door. One sec, please.
And so those events tend to really kind of increase profit margins. Increase pricing. So Google can charge more.
All right, sorry about that. I have two massive doors, but I forgot to close one of them. And Lauren brought me a coffee. Anyway, I forgot to close one of them, and I'm like, oh my gosh, I hear him screaming. Which, I mean, children scream like every freaking day. It's not like a surprise. But yeah, once the two doors are closed, it is silent. It's almost like nobody's here. All right. There we go. Let's get this launched up. Good. So big earnings today. We got 5 minutes left in the trading day. Market very, very excited. And I expect, honestly, like great forecasts from these companies. AMD, Google, because people are spending money like crazy. That's the thing. Starbucks. Like everybody feels rich still, even though the market's kind of rotated down. Everybody still feels rich, so they're spending money like crazy. We'll see. PayPal. My gosh, PayPal has sold off so much. I really hope you get some positive data from PayPal, because it's just been, fintech has just been destroyed, man. Fintech's been one of the worst sectors over the last 2 months. It is just absolutely like nothing's been safe in fintech. It's been terrible. Oh well. All right. GM today also. The problem is they're at 5, so I'm not going to sit live for that long. But I will be going through the earnings calls of all of these and later. But I'll also be going through the actual reports as they get announced as they come out. The big one happening right at 4, though. Hold on, let me make sure I get these all up here. So I got Google, I got PayPal coming up. Then we have AMD. It's going to be big for NVIDIA as well, because remember, NVIDIA, this thing was selling for like $320. I mean, the thing was going to the moon, and then it stopped. Starbucks is 405. EA, that's right. EA Sports, not sponsored. This video is, however, brought to you by FTX.us. Go to metkevin.com/FTXUS to get yourself 10% off on all your trading fees. Check out the amazing trading platform that they have. They are 85% cheaper than any of the other platforms already. So you're saving money, going to the platform, saving money on the very nominal amounts they charge you, and you get to finally integrate TradingView with crypto trading. Huge, especially in this market. We're going to get a lot of channeling and swinging. I think they're great opportunities. So metkevin.com/FTXUS to learn more. Okay, so I've got up PayPal, Alphabet, AMD, Starbucks, and EA. GM will do later, and I guess I could quickly throw up Gilead, although I'm not so inclined to cover Gilead because I don't really know how much that's really going to matter towards our broader market. I'm looking more for broader market indicators. Let's see how the market's going into the close. Let's see here. Ooh, 0.79 on the SPY. That's great. Oh, look at that run. That's really nice into the close. We might end up a full percent here. 2 minutes left. We're not going to make it to a percent. That's solid, though. 0.8% on these guys. Look at that. NVIDIA goes from red to green. Come on, tell me Tesla went green. No. Tesla is hodling at that 931 level. You've unfortunately got Microsoft. Microsoft's probably down on the FTC news on the Activision check in there, so it's not a terrible surprise that Microsoft's a little down. Matterport, come on, man. What's going on over here, Matterport? It is sitting at 959. I never thought I'd see the day it was below SPAC IPO pricing. It's just nuts. Yeah, Etsy's down 3% here, which is weird because consumers are still spending like crazy, just maybe not necessarily online as much. But look at these guys. Look at this run here. Look at this. Arrival 15. DWAX up. It's a risk on day. Open Door 8%. Upstart Trader Stock here 7.6%. BTC pushing up. HUD 8 Mining 9.18%. Absolutely incredible here. Big small cap move here. You've got Netflix up 7.2. Lemonade 7.11. Really incredible. Owlet. Oh my gosh. Owlet's up 6.5%. I was just talking to them with a nurse over the weekend. It was a cardiologist dad was helping us. Anyway, long story. But anyway, they love it. So everybody we talk to in the medical industry seems to have a positive impression of Owlet. They've just been beat up so much. Small caps, terrible. Anyway, 30 seconds to go here. Affirm's up 5%. It's hanging around at 67 here. Is it JPM that's really pushing, or is it? Oh, you've even got Boeing and Spirit. You got the airlines here. JPM kind of stable into the close. Let me look at DAL here and CCL really quick. Yeah, a little run there by DAL into the close. And Carnival up 5.7% today, almost at 21. Hasn't really gone anywhere in a while, but still a nice positive day. Let's get the bell.
Two trading sessions. As the bell goes, we're not far from the session high, up essentially 0.7 or 0.8%. All three of the major averages, with the small cap rattle up more than 1%.
Okay, well, there you have it. Dow is up 0.77%. S&P up 0.68%. So close to 0.69. NASDAQ up 0.75. Russell 2000 1.1. Really the Russell pushing here. Very, very good on the recoveries. I think, honestly, you're getting this Russell move because of expectations of mobility data U-turning, having that V-shaped recovery on mobility, which is huge. Okay, let's see if EA already spits out on time. No, not yet. We are now going into earnings. Big earnings. Again, we have earnings on EA, Google, Gilead, Xbox, AMD, and PayPal coming. Oh, here we go. Okay, EA comes in with 23-cent EPS, net of 66 mil. That's a miss. Still sees fiscal year EPS of 6.95. The estimate was 7.1. So the full year was a miss. Fourth quarter adjusted revenue of 1.76 billion versus the estimate of 1.82. That's a miss. EA adjusted EPS of 3.2 versus 3.23. That's a miss. Forecast, miss. Quarterly dividend maintained at 17 cents a share. It's not so ideal. I want to see the price action here on EA. And then I do want to get into the forecast of them. So the chart looks insane right now on EA because it actually looks like the stock is trying to go up, but I don't know if they realize earnings are out yet. There we go. Okay, now it's going down. I'm like, this is just such a weird market. Look at this. Dude, we beat CNBC talking about EA by about 30 seconds. Like, we could arbitrage CNBC here. We got that info out way before. That's crazy. 5.2 due to the downside. Yeah, that's not good. Let me get a little bit. I need chapstick so badly. Anyway, the skiing and no chapstick sucks. But anyway, third quarter adjusted revenue 3 point. So they reported third quarter and they're forecasting fourth quarter. And the forecast came in about, what percent lower is that? That always helps me. 1.82. The forecast came in 3% lower, 3.2-ish% lower, which is not what people want, because remember what I said before earnings season? I'm like, everybody's going to care about forecasts. Forecast. That's what everybody's going to care about. Nobody gives a crap about the last quarter. We already know the last quarter. It's gone. We lived it. It's over. Focus on what's going ahead and what's happening right now. And that's a miss. Again, only about 3.3% here. Market, I think, is probably over punishing EA a little bit with a 5.69% decline. But that's the way the cookie crumbles. Now down 7.3% on EA, 6%. It's going to be volatile in the after hours. So we'll come back. Okay, here we go. EAC. No, okay, yeah, that's not. EA Network has more than 540 million unique accounts. Unique active accounts. Ooh, that's even more important. All right, good. So I think next we're waiting on Xbox, Google, PayPal. I think Google is at 15 after. So next should be Starbucks. And I think Gilead. I'm not so enthused really about covering Gilead, but I will. Gilead should be out. Oh, there we go. Gilead comes out with revenue of 7.2 bill, net of 382. I don't know what the estimate was. Adjusted EPS of 69 cents. Oh, here we go. Oh, this is a forecast. Also, don't know what the estimate was. That does me no good. Forecast EPS of 4.7 to 5.2 for 2022. See if I can get that really quick. We only got about 10 seconds before Xbox comes out. I'll come back to Gilead here. Oh gosh, Google came out early. Oh my gosh. That was 10 minutes before expectation. Google ad revenue beat. Came in at 61.24 bill versus 58.22. EPS came in at 30.69. Big beat on Google. 27.35 was expected. Let's see here. Google Cloud loss came in at 890, a little bit larger than expected. They were expecting 820. Google Services came in at 69.4 bill. The estimate was 66. That's a beat. Operating income came in at 25.99. That's a beat. Operating margin came in at 29%. That's a beat over the 28.8%. Operating loss was larger. What other bets operating loss, I don't know what that is, was 1.45 billion. The estimated loss was 1.32. So certain sectors lost more money. The top line revenue was insane. That's a blowout of top line revenue. Top line revenue came in at 75.33 billion versus the estimate of 71.8. 75.33 versus 71.89. That is a beat of 4.9%. That's incredible. Killing it, Google. Really, really good job, Google. EA Sports now down about 5.2%. Let's go ahead and see how the Google can. Look at that move there. It's up 4% right now. Let's go. This is huge. This is such a huge beat right here. Very, very, very good, Google. Okay, let me now jump on over. I can't spend too much time looking at 6 because we got more to report. Okay, Starbucks comes in. Ooh, that's a miss on Starbucks. Starbucks comes in with 72 cents versus 80 cents expected on EPS. I want to know forecast. Give me a forecast, please. Starbucks posts mixed results as higher costs and COVID pay weigh on profits. Q1 rev 8.05 bill. Net 815.9 mil. EPS comes in at 69 cents. Same-store sales, North America up 18%. International same-store sales down 3%. Global same-store sales average 13% up. Chinese comp sales were down 14% versus the 9.25% expected. So China just smoked Starbucks here, probably because of Omicron and more lockdowns there. So China really weighed on Starbucks there. But that's definitely a miss. That's a 10% miss on EPS on S-Bucks there. But going back to Google up about 4.4% now. Really good job, Google. Looking at the S-Bucks here, we're down about 2.4%. Not miserable actually for a 10% miss on EPS. EA down about 6.23%. Tesla pretty much flat here in the after hours. Let's see how some of the other FANGs are responding to this Google here. Facebook up 1.3% after this Google earnings here. Let's look at Apple here. Apple not really moving off of this. Makes sense because they've already reported. NFLX, they've already reported as well. Not really moving off of this. Microsoft has already reported, so no biggie here. Okay, so let's get a little bit more news here. Starbucks to talk about guide during their earnings call. Okay. Still waiting for AMD now, folks. Stay tuned for AMD. Right now, Snapchat, Pinterest, Facebook, Twitter are all gaining in after hours after the Google move here. That does not surprise me. Let me look at Pins quickly. Pins is moving only about 1.3%. Google still up about 4.2%. Pretty impressive. Good job, Google. Google reports cloud revenue of 5.5 bill versus 3.83 a year ago. Wow. Waiting for PayPal, AMD. Starbucks complaining again about the inflation issues. EA blames Battlefield flopping. Gilead forecast misses estimates. Ooh. Not so ideal on Gilead there, but I'm focusing more right now on PayPal and AMD, which we should have either in the next minute or 6 minutes. It depends. Go back to Sticks. Want to see Gilead. Okay. Yeah, Gilead down about 2.5. Google. What's Google? Oh, Google announces a 20-for-1 stock split. Holy crap. That's going to lead to a lot of YOLOs. Oh my gosh, 20-for-1. This just in seconds ago here. Google is going to have a massive stock split. This thing, the stock is now up 5.8%. The enthusiasm is just going to go nuts on this. The stock right now is at $29.23. If we divide that by 20, this brings the stock down to $146. I've not seen a Google split. I can't remember last time. General Motors revenue misses. So we got a miss on GM. Revenue coming in at 33.58 versus the 34. This is going to become your new flight to safety puppy right here. People are going to go nuts over this. I think people are going to go crazy for Google now. This is really, really incredible. Broad-based strength in advertising sector. Oh my gosh. Yes. Wow. YouTube ads, 8.63 billion. Holy moly. Still waiting for PayPal, AMD. Wow. That is so big on Google. Google now up 7%. There's going to be so much speculation going into Google now. Oh my gosh, 7.3% of Google right now. I would not be surprised if we top 3,000 by the end of the day. As this spreads, I think people are going to go nuts for this. This is incredible. This is going to move the indices tomorrow as well. Google is one of your major indice components, so this is absolutely huge. Wow. Let's go. Yeah, sitting at 7.29%. Okay, trying to get more news here. Still waiting on PayPal and AMD. Starbucks down about 2.7. Google trying to hold on to about 7.2. Just be careful. I think there's going to be a lot of trader volume that goes into Google as well. I'm trying to find a date as well. Okay. I don't think we have an exact date yet for that Google stock split, but a lot of enthusiasm going there. All right, let's see. AMD still no earnings. Waiting for AMD now and PayPal. Those are both going to be quite critical as well. Excited for both of those. All right, I'm going to put AMD right there. One sec. Just want to get ready for these to pop. PayPal. Still waiting for... I'm going to guess we'll have those in about 3 minutes here for AMD and PayPal. So I'll keep an eye on those. Okay. Watching Google is going to be very interesting. I mean, what a move on Google, though. It's stabilizing at about 29.59 here. And again, this is going to be a big push, I think, for the indices. PayPal, not yet. AMD, not yet. How is this moving the rest? How is everything else moving in the after hours? Oh, Trade Desk jumped 3% on advertising. Very nice. 3% move on advertising. Yeah, I mean, that makes sense because Google skyrocketed here. Snapchat up 2.5. Amazon up 1.63, 1.9 on Pinterest. Roku's even up 1%. Google chilling out a little bit, about 7.16 right now, 7.1. Again, we are just minutes away now from both PayPal and AMD earnings, which are also going to be pretty critical. Google, unfortunately, doesn't tell us much about supply chains, but in terms of the consumer killing it, that is awesome. Really, really cool. All right. Probably about 90 seconds away now. Google revenue, by the way, $9.31 billion. Google wow. I mean, it's just absolutely crazy. Let's see. Google advertising, $61 billion. YouTube ad sales popped 20% in Q4, topping Netflix revenue. They're making more money off YouTube than they're making off Netflix now. Oh my gosh. Yeah, for Google to run 7% is nuts. I mean, this is a massive company. Yeah, I mean, let me see here. Google stock. So Google is a $1.83 trillion market cap. You know, 1.83 times 7% is like $120 billion in the snap of a freaking finger. Wow. Okay, we should be about 20 seconds away now from PayPal and AMD. All right, here we go. Come on, folks. Google could also be seen as a flight to safety. A lot of cash this company has, so the favor that Apple. Okay, AMD. Revenue comes in 4.8. Operating margin 27%, way higher operating margin, 3% higher than expected on operating margin. Revenue beat 4.8 versus 4.5. EPS, whoa, big beat, 92 cents versus 75 cents. That's good. Computer graphics come in at 2.6 bill versus 2.44 expected. That is a big beat. No PayPal yet. Good freaking job, AMD. That's going to help push up NVIDIA as well. Gross margins over 50%. That's insane. Net came in at almost $1 billion, came in at 974, but an EPS coming in here, adjusted EPS of 92 cents versus 75 cents expected. That's big. Forecast is way more than expected. That is a big beat on forecast. Forecast was 4.33 billion, and they are guiding basically 5. That's the midpoint guide is 5. And CNBC is sitting on commercial right now, by the way, which is hilarious. But that's a 15% beat on forecast for AMD. No freaking way. Dude, that should take AMD to the absolutely to the moon. Oh, yeah. Okay, now we're moving about 6.3%. I mean, 15% forecast bump. That's really good. Now, I want to see supply chains, how they're holding up with that. PayPal comes in at the total payment volume 0.34 mil, slight miss on total payment volume. PayPal adjusted EPS comes in at 1.11 versus the estimate of 1.12. Slight miss on adjusted EPS, slight beat on revenue at 6.92 versus 6.89. Total payment volume slightly missed. So PayPal is really more of like a meat, but AMD is the one that frickin' destroyed with that forecast. I'm just surprised it's not moving more than 5 or 6%. That's crazy. PayPal now dropping. PayPal down about 2.7% right now. Google absolutely crushing it, especially the stock split really helping push this one to the moon here, about 6.7%. Personally, I love Google. I can't buy stuff in after hours. But I choose not to. But anyway, really incredible here. 6.66% now on Google. AMD 6.3%. Honestly, AMD probably deserves a bigger bump than that. These are some incredible numbers here. Starbucks, where's Starbucks? So PayPal's now down almost 6%. That's insane. This is going to hurt fintech, folks. That's not good. Let's go ahead and see if we're getting collateral damage on some of the other fintechs. SoFi's down about 0.5% right here. Not massive collateral damage. Robinhood's barely moving on this. Okay, let's just look at some other tickers we got here. Tesla's flat in the afters. AAPL down about 0.25%. Gilead's down about 3.61. Huge move. This is going to hold up the indices tomorrow, though, here on Google. 6.6%. If that Google moves to the downside, like if we opened red on Google tomorrow, I would be just devastated, like shocked. Like this market just does not want to rally. I think this is a really good set of earnings here from Google. Absolutely shows the strength of the economy, and that's what the big irony is right now that we have such a strong economy. But then the problem is the more we get reports like this, the more J-Pow's going there. This is exactly why we need to raise rates. Anyway, a little surprised you didn't get a bigger pump here on AMD, especially with a 15% forecast beat. Let me see if I can get a little bit more here. Google stock split, absolutely incredible. We've got AMD. Let's see here. Q1 revenue expecting $5 billion. Consensus was 4.32. I mean, this forecast is huge. Wow. Gross margin comes in at 51%, higher than expected. This is AMD just really incredible. Okay, let me see here. Google, talked about Google. S-Bucks really got whacked by China. And you had some big old sales last year, so it's not a surprise. EA is not doing well with their miss. And PayPal forecast. Oh, bad forecast. Oh, my gosh. The adjusted EPS forecast is midpoint is about 467. 467 on midpoint full year EPS for 2022. The estimate was 5.23. That's almost an 11% reduction in forecast for PayPal. Oh, goodness gracious. That's not ideal for the fintechs again. Google slipping a little bit, and AMD both dancing 6% right now, which is quite incredible nonetheless. But that PayPal forecast is just absolute trash. Oh, It's no surprise. It's down 10% now. Yeah, they slashed their forecast 10 to 11%. It's so bad. Oh my gosh, fintech. No. Wow. Oh yeah, Square is sympathy falling on this one. 3.2% here. Wow. Wow. Affirm, not happy about this either. 3% to the downside. I wonder if this is affecting Visa now as well. Not really. Visa don't give an F because it ain't fintech. It's just fin. Okay, AMD back up to that 6.65. It's just very volatile here in the after hours. That's fine. It's not so worth looking at the numbers now. What's more important is seeing what happens tomorrow morning. But yeah, fintech destruction, as lately has been typical. SoFi down about 1.88%. This is just a huge divergence here in the market between the bigs, the greats, the Googles, the Apples, and then the smaller up and coming guys, getting crushed. AMD is trying to go to 7%. Honestly, with a 15% forecast guide beat, it deserves to be up 10% or more. But I mean, deserves and actually happens means nothing. Wow. I cannot wait to check out the earnings call for AMD. PayPal, oh my gosh, the forecast was so bad. Google, same thing still. Split, we talked about this. Starbucks slides after citing inflation costs during holiday quarter. So blaming inflation. I think that's the thing. If you have bad news to report, just blame inflation. If you have good news to report, blame your company. Wow. All right. PayPal adjusted EPS 87 cents. Consensus. Oh my gosh. Q1 forecast 87 cents. Consensus was 1.16. That's even worse than the actual revenue forecast. So that would imply cost increases here. Amazon shares up about 1.6% with Google rising. Okay, here we go. AMD finally pushing. Finally, AMD is actually being appreciated here. Like I said, I thought it should be up more. Now it's actually going up 8.9% right here. Google sitting around that 6.5 number. Going to be so great for the indices tomorrow. NVIDIA now up 2%. Pinterest coming out of the bottom a little bit here. Trade Desk, same thing we've been seeing. Here's Amazon, Roku. Amazon does a lot of advertising too. Remember that. Etsy, a lot of advertising. So, okay, PayPal here. By the way, if you want to trade the crypto moves on this, remember, metkevin.com/FTXUS. Okay, PayPal now down 11.6%. It does seem to be sort of bottoming at about this 153 level. But look how quickly, profits can be given back. We've had, how's our rally been here? Yeah, look at this. So we've come off the bottom of 152 for PayPal, which is like, a recent all-time low, basically, over the last year, 52-week low. And we ran all the way up to about 174, along with this sort of cycle of bullishness here. And we're now lower, at 11.5% of a decline. Oh, no, we're not. We're just slightly above our all-time low of about 152. Well, 52-week low, I should say. Not all-time low, but no bueno here on PayPal. So this will red candle right back down. Google really seems to be trying to prevent going to 3,000 before the splitsies here, but has had bottomed out just under 2,500. That's crazy. January 24th, just not that long ago, and knocking on the door of 3,000 right now. That's about a $500 move. That's wild. Look at that, 3,000 divided by 2,500. It's about a 20% move. For Google, moving 20%, that's nice. Very, very, very good job. Oh, wow. Look at Enphase, folks. Enphase is at 142. It went down all the way down to 113. It's at 142 right now. Wild. All right, folks. So this gives us an update on earnings. I'm going to quickly see if there's anything else. No, No. Yeah, PayPal was the big problem. They're talking about a volume hit due to a return to in-store shopping. And we know EA got burned as well. But again, AMD, Google are the ones killing it. EA is down 5.29%. That's kind of been stable. It's where it is. After hours here, Tesla's flat. Okay, AMD is now just over 9%. Also wild. Yeah. All right, we don't have a date yet for that 20-to-1 split. And yeah, let's look at SoFi here. SoFi, another fintech's only SoFi's only down 1.58%. That's actually nominal. And I think Square is more of the sympathy play for PayPal here. Yeah, because they're down about 4%. That makes sense. All right, folks. There you have it. Thanks so much for being here. Make sure to watch my video. Go watch my video right now if you have not seen it yet on the dangerous report for the stock market. That's the last video I posted. And I'll do something similar for these other companies that just reported today as well. All right, folks. Thanks for watching.